I'm your boss, Joe Boss, and welcome again to another daily plan. Today was quite a surprise. All the headlines are just bleeding red right now, especially in the equity space around the entire world. You can see on the watch list we have the UK, France, Japan, New Zealand, Australia. This is all a bloodbath. I mean, even if you look at the top 10 holdings of the S&P, here I'll hide the indicator so it's super clear. That is a horrible, horrible, horrible day. I mean, it's about as bad as over here, but yeesh. This is absolutely terrible. The S&P spiked lower. It's probably the biggest red day in a long time here. Wow. And this is on the day just before NFP. So I don't know if this is front running for NFP or there was some particularly horrid bits of information, but we're going to look at some of the news over here and see if we can glimmer any insights from this. Let's see here. Consumer discretionary and industrials were the best performing sectors, while healthcare was the weakest, weighed down by declines in Pfizer, Eli Lilly. Among mega cap stocks, Meta rose 2.3% today. I mean, yeah, you can say it rose, it gapped, but this does not look bullish to me. that does not look good. I mean, it went ahead and it tapped 530 up here. So it tapped 530 right on the penny. But I'm not too sure this is what you're looking for when you're saying, hey, Meta rose 2.3%. That doesn't look so great. And Microsoft gained 1%. Let's see if it looks the same. Oh, it looks even worse. How could you say this thing gained 1%? This was 2 hours ago. So did this happen just in the last 2 hours? Oh my god, yeah. So just in the last 3 hours here. In the last 3 hours, things have just totally gone to crap. Let's go ahead and check and see if there's anything we can glimmer from here. By the way, this is called a squawk chat. So if you are trading and you want to be on top of news as quickly as possible as soon as it comes out, Financial Juice is a free way to get access to that information. You can pay to get the information, slightly faster, and to help support Financial Juice. They got a great team and they've got a great product. Not sponsored, but I've been using Financial Juice for years at this point. Let's see here. Fed Kashkari raises the possibility of no rate cuts this year. So stocks fell ahead of Friday's jobs report as oil rally amid geopolitical tensions prompted a flight to the market's safest havens. Well, if that's so, then did the dollar go up? Yeah. The dollar essentially reversed its entire move from yesterday. And if we look at it on a slightly higher time frame, look at that wick. Look at that bottom wick. That is huge. So the thing dipped below 104 and immediately rocketed back up. Wow. Just wow. And let's look at our drawings. Oh my god. So this is following nominal expectations to a T. While I'd say we were right in all seriousness, I think we were kind of right on the timing, right? Here is where we expected the pivot, and the pivot occurred. And here's where we expected the pivot, and the pivot occurred. So we're hitting our expectations. How about here on the downside? Yeah, you can actually see this is a peak in the range probabilities indicator. This is where we're most likely to find a low for any given week. And this was a more bearish week for the dollar. So we expect to find our low likely around here. And we'd be kind of running with our heads off if it went, past 103.8. Because at that point, you're dealing with very uniform looking odds. That is not good. You can see the tail of the distribution way down here, like in the low 102s for those weekly ranges. That is absolutely nutty. Up here, I was expecting more risk off bullish continuation, but then we started to get some very, very good PMI numbers out of the US ISM and from, I believe, S&P Global, and that reversed this move. However, we did also get PMIs for Europe, and they came in well. And in fact, I was kind of surprised when the euro didn't really bump that much higher off of it. Like, this was the move that we got. If I could, real quick, hide this bar coloring here. So right here on this bar here is when we start to get our reports for those pretty decent PMIs. And it didn't move all that much. Moved, what, 30-ish pips off some good PMIs. And again, we got the rotation timing correct this week. And we got the general direction correct, except for this overshoot right here, when I started setting more bearish continuation expectations. Yeah, and this was 2 days ago. I'm like, this thing could reverse lower. And I took 2 shots here on the short side. And yeah, looks like we're going to be following our nominal expectations. Yeah, it makes me wish when I was looking at my week ahead expectations that around here, I took my shot, right? You can see we just tapped that spot where a likely low comes in for the week, which is why it's like, more bearish continuation, you're more likely to head into that spot. If we look at things seasonally, actually, this is probably pretty good to look at right now. This is the range. This is the probability pivot points. Takes seasonal data from the chart's history and tells you, hey, given historical seasonal returns, generally, where do you find your close for a given week? You have some closes up here. So if we had good data today and all these equity markets around the world didn't crash, I would have expected us to close here around 109 on the euro dollar. But it looks like we're going to be following our nominal expectation and closing in this area where most of our closes for a given week actually occur here between S1.5 central pivot. And as an FYI, I'm using average true range pivot points. So these are more volatility adjusted pivots. I've actually started liking these more than the traditional pivots. Because you can see with traditional pivots, I mean, look at this. The next week's pivots are very, very expanded. Look at that. The volatility from this week is just sending the ranges for these pivots to crazy bounds. And it's making these ranges here like 30 pips between each one of these pivot points. So by using average true range, it kind of normalizes the size of these pivots. And we can see, hey, most of the closes for next week are around this R1S 0.5 ATR based pivot point. So maybe we get some more range bound movement next week, which will be good. And tomorrow's stream is going to be the week ahead trade plan stream. So definitely tune in for that. Those seem to be the most popular streams that I do alongside the month ahead trade plans because everyone likes to see, hey, what are the expectations Joe's going to set and is he going to hit them? So thank you guys for watching and following through and seeing like, hey, Joe hit his expectations here, but then in the end of the week, you got some crazy news. And this week was just totally off. And this week was timing wise right on it. It had a bit of overshoot, but it went back into trade and the nominal expectation. So this is why setting expectations and time stamping your expectations ahead of time makes a lot of sense because you're able to follow up on what you thought before the things started to happen and then update your expectations as they go along as new information comes along. Okay. Let's see here. Bond yields fell across the US curve despite the we have to double check all this information. What time? It doesn't give us a time that this stuff was released because it seems like just in the last couple of hours we got these crazy moves here. Yeah, check that out. The Dow was down 300 points. It's now down 566 points. Let's see here. This was released actually a few minutes ago. Real quick, I do want to check out that claim on the bonds. So let's see here. US yields are actually just kind of holding flat. They did fall here, but so did the rest of the world's bonds. All the bonds were rising, and the yields have continued to fall, which is not a great move. And note the measure here that I'm looking at actually is this change column here, this first red number. And you can see these red numbers here for New Zealand, Canada, the UK, Europe. All these yields are a lot more negative than the US side of things. So it means that the yield spreads are widening against the US in not a very favorable manner. So if we head back over to, I don't know, the Aussie, which really got itself kicked today. Let's go ahead and look at our expectations. Yeah, this thing really overshot. We caught that low expectation. This thing really overshot our high expectation. We're about 1 bar off here on our timing, but it seems like we'll probably drift lower into a close. Yeah, either this thing's gonna snap down here or it's gonna just have a slight drift lower. Really depends on how that NFP is going to print. We'd like to see NFP print nominally, but there was also news that today's a lot of businesses were going to cut like 90,000 more jobs. So you're getting some good news, you're getting some bad news. Things are fairly mixed right now, except for those PMIs that sent us up, and away here in the middle of the week that showed manufacturing PMIs were starting to accelerate faster than the services PMIs, which is good. Very, very good, because the sticky part of inflation comes from that services component. So if services starts slowing down a bit, hopefully CPI around the world for all the major countries doesn't stay so sticky. Let's go ahead and read some of Mester's quotes here. I expect progress towards 2% inflation to continue. It's possible the Fed won't cut rates this year if inflation stalls. I expect to be in position to cut rates later this year. So this is Kashkari saying no cuts. Mester saying second half of the year, maybe. So these guys are definitely on the more hawkish side at the FOMC. Goolsby In March, I jotted down 2 rate cuts this year, which was actually the median expectation from the Fed dot plots. But if inflation continues to move sideways, it makes me wonder if we should cut rates at all this year. Okay, so there's just more people out of the Fed getting more hawkish from their already pretty hawkish position of 2 rate cuts to essentially zero. So we really need to see the services side of inflation fall faster in order for the dollar to actually meaningfully create a trend lower. And I would not be surprised if I actually went and looked at these S&P values here on the 1 hour, and I go to, yeah, check this out. So this is why it's important to have squawk. So notice the timestamps of these 11:11. I'm US Pacific time. So these are coming out at 11 a.m. for me. So all these talks from saying, hey, these 3 guys might get a bit more hawkish came out roughly in the same time period. I need more evidence that inflation is moving down, says Mester. All these came out just after 11 a.m. my time. So if I go to 11 a.m., that's where we had our big red bar on a lot of these equity indices. So if I go to, let's say, a 5-minute chart, and I look at when the waterfall started, let's see here, it started around here. So people were probably getting short. Wow, look at that autocorrelation. That is nutty. Around here, where we had our first, our biggest red bars in this waterfall here, in these 2 bars, that's when these chats were coming out. And then I'm guessing it just kept going and going and going. And then people started buying a bit, buying a bit, buying a bit. So at this point here, this is when buyers started stepping in the last 50 or so points and trying to create some support. And you can see how we got a lot of red bars right here. Red, 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 red. This is very strong momentum negative autocorrelation. And at this point, this is when the autocorrelation starts to slip. It starts to go green, green, well, red, red, green, red, green, red, 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 green, red, red, green, red, green, red, green, 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 red, green. So you can see when you have high autocorrelation, you're going to get a lot of the same color bars. And when your autocorrelation starts to slip, you're going to see red, green, red, green, red, green, red, green. It's something to keep in mind when you're looking at it. And around this point, I'd expect the autocorrelation measure starts saying, hey, things are starting to get a bit more choppy. So around this spot, more support probably came in from the guys who had the balls to really take shots at this spot here. And this isn't really a good look going into NFP, to be frank. You can see our expectations kind of were whiffed here outside. I mean, I'd say they're totally whiffed for this particular week on the S&P. Most people would not have set this sort of expectation here at the beginning of the week. You can't really forecast when Fed speakers are going to come out and say, oh, we're going to get more hawkish. This is why you need something like a squawk. You need access to information as quickly as possible, so then you can update your expectations as quickly as possible. And when you set expectations for the whole week ahead of time, this is just the benchmark of, hey, going into next week, here's what I think. And then you set the expectations and you update this expectation as you go along and get new information. So it's not like, oh, this is the end of your trading career when you set an expectation and it doesn't get matched. Exactly. Kind of like, with all these FX pairs, I've been spot on. Like, for example, with this New Zealand dollar, did I do pound? Yeah, pound looked very similar to Eurozone, where it had the massive overshoot, but still timing wise, we still got our nominal up move and our close. Let's see here, and then on the euro dollar, you can actually see. Oh, didn't mean to move that drawing. Let's go ahead and lock that in place so it doesn't happen again. Yeah, you can see right here, negative move, huge overshoot, and then back into the nominal expectation on those good PMI numbers that occurred earlier in this week. And then on the dollar CAD side of things, yep, also lining up with expectations. Maybe the timing is off here just a tad. Maybe the timing is off here just a tad. But it doesn't look like the Canadian dollar is holding up against the US all too well compared to a lot of these other assets. I mean, especially the Aussie dollar. The Aussie dollar has really been kicking some butt here. We set more positive expectations here on dollar yen, but just looks like the dollar got hit a lot more against the yen for some reason, even though pretty much it's been going sideways. Following the nominal expectation again. Let's see here. Fed's Goolsbee, biggest danger to inflation picture is continued high inflation in housing services. And I'd agree with what Goolsbee says here. Remember what I said about the services component of inflation. This is the stickiest part, and housing makes up a huge part of inflation, and it's a huge part of the services component of inflation. And it doesn't seem like the housing services inflation is going to be coming down anytime soon in the United States. Unless more, I mean, I've been hearing stuff about, like, I'm just speculating here from things that I've read over like the last month or so. But apparently, there's a lot of houses that were foreclosed during COVID, but the foreclosure of those houses had to wait because of the housing moratorium. And so their foreclosures got pushed out like a year or two. So apparently this year, a lot of those foreclosed houses are finally going to be on the market. But now you have a problem with squatters in these houses. So even if you did want to sell these houses or do something with them, you have to. A decent chunk of these houses are now getting squatters. There's actually immigrants who came into the U.S. through Mexico that are on social media saying, "Hey, this is how you can get a free home." And it's making it a lot tougher because there's in a lot of these places that these houses would go on the market, quote unquote, relatively soon. Uh, there might be another delay to these houses getting put on the market due to the squatters being there. And that's just theory, that's just speculation on my part. Let's see, if housing inflation does not come down, would be very difficult to return inflation to 2%. Yeah. So you can see Goolsbee's very focused on housing. Housing inflation is my most valuable indicator for the immediate future. More than conceivable that the Fed returns to 2% without substantial rise in unemployment. This is really what the Fed wants to see. This is from Fed Barkin. If inflation falls and they don't have to do any rate cuts to try and maintain the current pace of employment to keep things nominal on the employment side of things, that'd be great. It's just a matter of, can the economy actually juggle that? Because a huge component of employment right now is, well, still giving people higher wages. When people are going into a new job from, let's say they're changing jobs, right? Is a better way to put it. People are changing jobs. Usually there's a pay increase of about 5 to 10%. So you're going to see some bump up on the wage front of things if you want to keep this employment moving. And it's going to be hard to send inflation lower if the wages keep rising, but maybe that's just a trade-off that the economy has to make, is give into paying people more as inflation continues falling, because at least on an absolute level, inflation is still very, very, very high. I've seen some short videos of people complaining that it's like $50 for like 3 items. I think that's a bit ridiculous. Um, but also I've seen people rightfully claiming like, dude, it cost me $100, over $100 to fill up my tank at Costco, and Costco has some pretty affordable gas. Man, uh, gasoline's. I mean, I think that the next inflation print is probably going to reaccelerate. We can go ahead and look at gasoline. Oh my God, gasoline is up another 1.25% today. This is not a good look for inflation coming down. When the price of gasoline keeps rising like this, it puts a lot of strain on commuters. And you can see since the beginning of March, gasoline has just been rising and rising and rising. This is one of the reasons why I think inflation is going to end up reaccelerating in April, when we get it around mid-April. So there's about one more week where we could where we could see some positive light. But for example, if we look at that euro dollar chart again, look at the range probabilities, hide the drawings real quick so it's easy to see. Most of the closes next week are fairly range bound, right? Most of the closes are around here. Between R1, S1 is what I would consider range bound. There's some odds that are further up and further down, but nominally the closes are range bound. So this makes me think the second week of April is going to just be sideways week. We can also look at the DXY real quick here. And we have 34 years of data, and you can see this is also a more range bound week, but it has some skew to close lower. So there is some hope, cross your fingers, that the dollar does end up moving and closing, sub 104 next week if some particularly good data does come out. I'm not exactly sure if NFP is going to be that data point or not. I think people are going to be focusing more on wages and unemployment. Because in my last stream, I mentioned, hey, uh, just because NFP jumps lower or stays the same, what you would want to see is actually NFP stay as high as possible for as long as possible, and for unemployment to stay suppressed, because it means that the economy is growing, it's rehiring a lot more people. But when it comes to NFP going lower, there's also the side effect of how much of this is from long term growth effects over the last 2 years, where businesses are naturally returning to their more nominal rate of hiring. After letting go a lot of people here during I don't know, the last 6 or so months, a lot of people in tech have been let go. And what's interesting is I've been watching some YouTube channels of guys who are in the trades. I've been doing that for a few years now. I love watching those guys on YouTube. They're really smart guys, very, very smart and funny. um, but now it's like, hey, you got to trade in your white collar for a pair of boots here. That seems to be the common phrase that I'm hearing more and more frequently is you're going to see more white collars trade in their collar for a pair of brown boots and try hopping into the trades. And depending on the area that you live in, at least in the United States front, I know not everybody lives in the United States, but it's just, you know, such an important economy. It's important to kind of know what's going on microeconomically. On the US front of things, these trade schools that teach people to be, plumbers and electricians, carpenters, they're actually really, really heavily booked. It's actually somewhat competitive now to get into training people, at least in some areas. Some areas, there's still a lot of demand for new blood, but there's a lot of people who are just like, there's so much demand for education in trade skills right now because people see they can easily make six figures doing a trade skill now. That it's kind of overwhelming the educational side of things, the current educational infrastructure for a lot of trade skills. Let's take a sip of water. Let's see here. Anything else here? Oh God, Trudeau. The government has no plans to raise taxes on the middle class in April's budget. Yeah, well, you know. I think there was an article that came out saying like Trudeau needs to step down or be investigated because apparently there's been some new evidence that he's been in actual direct cahoots with the Chinese against Canadian interests. I don't have that article prepared here, but maybe that's something if you guys are interested in Canada's geopolitics, you can look up. We can actually set up a thread for that in the Discord research forum here in Planet Profit. Speaking of which, as a little tidbit, one of the things that I just posted today from the geopolitical stance in the research forum in the Planet Profit Discord is actually this article here from The Guardian on AUKUS. So there's a thread that we have following AUKUS developments. U.S. shipyards are up to 3 years late. They're 3 years behind schedule on submarines as concerns grow for the AUKUS pact. U.S. shipyards are running up on 3 years late in building new Virginia-class submarines, despite suggestions from U.S. Senator diplomats that the AUKUS pact with Australia will help deter Beijing from seizing Taiwan. This has been an ongoing thing. This has been absolutely horrible. And it's not even a month ago. This was like 2 weeks ago that there was a trilateral statement between the DoD and other participants in AUKUS. So this is Australia, United Kingdom, United States announced the optimal pathway. The quote optimal pathway outlines an ambitious plan to deliver conventionally armed nuclear-powered submarine capacity for the Royal Australian Navy. A plan that will strengthen our three countries' combined military capabilities, boost our collective individual capability, yada, yada, yada. And this is like a lot of schmoozing, right? Australia has agreed to a 1.5 billion Australian dollar investment for early priority works at Hams Sterling to put in place enablers of safe, secure rotational presence of UK, US submarines. And the US is intended to invest $11.4 billion into its submarine industrial base across a 5-year defense budget period starting in 2025. So the United States is moving very, very slowly right now. Very, very slowly. And the UK is going to give 3 billion Great British pounds into its defense nuclear enterprise, including the construction of submarine industrial infrastructure that will help deliver the nuclear submarines for Australia. Oh, subsequently, Rolls-Royce has announced that it will double the size of its Derby site to support the delivery of the UK and Australian programs. Well, that's nice. It sounds like the UK's doing something. It'd be nice to, get some follow up here on the US side of things. But yeah, this is why we follow geopolitics. Because, I mean, this seems like a huge, huge blunder. I really wonder why it's taking so long. Oh, and this site's something else. This is actually for. I wanted to bring up, hey guys, Bitcoin halving. This guy has a Bitcoin halving timer here that I really like. All these extra statistics on hash rate and estimated time to halving. I'll go ahead and I'll put this link into the chat here in case you guys wanted to watch this. So there's the link in the chat. This is a pretty nice site. Swan Research for the win. I've been following this site. It's been getting bigger and nicer. I believe the site's actually open source on GitHub. But this is such a nice little display of, hey, here's the countdown to the halving given these current statistics of the Bitcoin network. Let's see here. Previous adjustment, estimated difficulty adjustment at the next set here. Oh, wow. Difficulty adjustment is going to go up 1%. That's actually not super insignificant. And then there's some models that you can run, some portfolio analytics you can run. This is a very, very cool site to look around, check out, and there's some good Bitcoin education here. Oh, look, Satoshi quotes. Let's see here. Yeah, interesting stuff. Interesting stuff. But I'm primarily going to bring up this site so we can check the status of the Bitcoin halving as we count the days, the hours, the minutes, and the seconds to the halving. And we can see how that's going to be impacting the network with the statistics provided here. And Bitcoin did recover today. It's up quite a bit. It's up 1.6K on the day. A nice reversal. I was actually looking at this on TRDO. And I was saying, hey, there's a lot of support coming in around here. I think it'd be safe to say we're still probably going to be closing in this general direction somewhere around here between S0.5 and R1 this week. It might close a bit more red because the open is up here, so I would go ahead and update my expectation so that then we're closing probably around this central pivot towards the end of the week. Okay, let's see here. Anything else news-wise for us to cover? We can actually probably just go down the gauntlet of stuff. Well, there's this thing here on oil, so let's do that real quick. And oil is also continuing to rise higher. Closing in this area is now not out of the question. So let's read what is here for WTI crude futures eased a little bit. I wouldn't say that they eased a little bit. I think they might have just run higher here in the last couple of hours. No, yeah, in the last 4 hours. And this thing was posted 5 hours ago, so it was posted right around here. And immediately after this thing got reported, the thing just shot up. Absolutely crazy. Let's see here. Analysts also noted Ukraine drone attacks on Russian refineries that reduced fuel supply, as well as fears that the Israel Hamas war may spread to include Iran. On the demand side, the latest US economic data pointed to a resilient labor market, boosting the outlook for overall consumption and energy demand. So, increased energy demand, flat energy supply. What do you do in Economics 101? You draw a line that goes up. Man, it has been a nutty ride this week and towards the end of last week here on oil. We set this expectation correctly. We whiffed it on this expectation, but we also updated our view here on the 2nd of April, 2 days ago, for this thing to essentially go into the high 80s for the month here. So real quick, let me slap this on and show you, hey, here are the ranges for the month. So instead of the lows, which are right now set to a weekly time frame, so this is for the month. So this is our distribution of where most lows come in for a month. And this is our distribution of where most highs come in for a month. And you can see right here, this is a peak where we have a cluster of particularly high odds in this spot. So we're getting a bit of red highlighting in this area. And if we update our data here for the seasonal, yeah, not too much, but you can see 23% of the time you're going past that R5. Might be useful to actually use, in that situation, the traditional pivot point type. So then you can get wider ranges. And yeah, you can see a lot of highs in this area right over here. So it looks still pretty darn bullish. If you overlap that with the monthly ranges, you can see there's still some overlap right around there. So far, so good on oil. And it looks like it's probably going to end up continuing on that path. And then there's this spot right up here, just in the $91 handle, where you can get some really bullish highs. I honestly wouldn't rule this out. So let's go ahead and draw something right around here, I'd say. And then color this green for bullish. 240404. Yeah, so a spike past here, I'd expect a move into the 91 cent range for the month. Just updating some expectations. Okay, let's see here. Gold. Gold is still holding on to these levels here above 2300. So this thing also, yeah, this thing was also rising, but it took a hit here in the last hour. So a pretty big hit that reversed this movement higher that all the other commodities were enjoying. So not a great look on gold at these spots here, but it seems to be holding up this 2300 location pretty darn well. And let's check out a couple other things. I mean, we already looked at Bitcoin, nothing else going on in the other coins. We followed up with our expectations on the FX side of things. And we did check out some of the equity indices here. So I think that's going to be it for today's stream. Next stream is going to be the week ahead trade plans. So for everybody tuning in, thank you very much for watching. And I will see you guys in a bit.